Greetings. Today is Saturday, July 19th. The market is closed. Going to tell you a longer tutorial on stock options. What are stock options? How do they look like? How do they work? Stock options are insurance for stocks. When you get started, you will have to buy or sell a entity itself, a stock ticker. Last week's Saturday tutorial, I talked about why we or I particularly only choose one type. It is called QQQ. That is the NASDAQ 100. Now, if you go to any brokerage and if you type in QQQ, you can outright, you see my finger, you could buy, or if you already have it, you could sell. Just think of you buy low, sell high, you buy, you keep forever, a very kindergarten first tier level, a good level of buying an entity that you could buy or sell. Now, this is Thinkswim. Now, if you look down here where my pointer is, there's this other things called chart. You can research it, but here is the thing. Look at options. It's literally right there on the same page on the tab. Now, this totally, completely opens up deeper things you could do with QQQ. First tier level, buy, sell. Second tier level, options. It opens up all of these strange looking things. These are called expiration dates. So now what makes options different from the stock itself is it has time value. There's an expiration date, and there are segmented by days or time out. This is Monday, July 21st. That's Tuesday, July 22nd. Goes off further, goes off further, goes off further. It can go all the way out to December 2027. That's 2 years from now. Okay, so that is a very unique item about options. It's not just the buy and sell the ticker. You have to buy and sell its time value. I'll say that again. You have to buy or sell the ticker's time value. That means that there's a start date and there's an end date no matter what. That makes option uniquely different from buying or selling a stock outright. So I'm going to expand one of these times, the one that's due July 22nd, which is Monday. Now you'll notice down center, you see my pointer here, that's the strike. The strike is the stock price at that time. I'm going to go all the way down and you'll see a dotted line. Eventually you're going to reach a dotted line right here. Okay, see where the pointer is? The dotted line is called at the money. At the money. At the money is where the price of the stock is right now. So it's at 561. You see that? Look at my pointer and look at the price of the stock. It's 561. QQQ is at 561. Okay, so if you could ignore the puts, the right side, we're going to look at the call side. Okay. So we have talked about the strike. Now, if you look at here, there's a thing called the bid and ask. Volume, you could disregard volume. But what is a bid and what is an ask? Under calls. Okay, so calls mean, in a buyer's perspective, calls mean the buyer believes that the ticker stock price is going to go up. Okay, so we have to establish what these terms are. A call is a long or an upward moving trend. That's all you have to know for now. Upward moving trend. It's going to go high, it's going to go well, it's going to increase. You have to just have those words in your mind. Okay, the next thing you have to know is ask and bid. These are older words used from when stock options open, but the other word for them as ask is the buying price. Imagine when you buy a car, they're going to say, we're asking $5,000 for this used car. Okay, so asking is the buying price And bid is the selling price. Bid, that means you're bidding all to these people. Hey, I am selling my car for $7 or $6 for $5 for $6.50. Bid, bid, bid. Who is going to get this price that I'm selling at? Okay, so recall again, call is an upward moving trend. Ask is the the buying price. Bid is the selling price. The dotted line here is the at the money or the price of the stock in its current time. Okay, so I think that's enough for today. We covered a lot already. Just to recap, options under an entity, the entity itself you could buy or sell regularly. When you think of a regular type of stock, you buy, you hold, you buy, you sell. Options is an offshoot, is something deriving from the stock. In this case, it has time value. You are buying and selling its time value. All right, so any questions, hit below, like, subscribe, tell a friend on this channel. I like options, about how to trade stock options.